One day, I want to honestly say, I made it.
Abundance Stock Advisors. Let's make money.
Hello friends, welcome to Abundant Stock Advisors. For many such amazing videos, please subscribe to our channel and hit the bell icon. And before we start, I wish to tell you something very important. You can download 36 life-changing training ebooks related to overall finance and abundance absolutely free from our website. These books will ensure success in the three most important pillars of your life, that is health, wealth, and relationships. The book titles and the download link can be found in this video description below. Now let's come to the topic. Dow theory is the oldest and one of the most important concepts when applying technical analysis to stock markets. We use this theory, friends, abundantly when we recommend stocks to our clients. It just increases our overall accuracy to a very large extent. It is very important for you to be aware of this theory. So friends, please stay tuned in this topic till the end. So, Dow theory was extracted from 250 plus Wall Street Journal editorials by Charles H. Dow from 1900 to 1902. After the death of Charles H. Dow, the other editors of Wall Street Journal, namely William Peter Hamilton, Robert Rhea, and E. George Schaffer, they organized the editorials by Charles H. Dow, expanded his work, and formulated the Dow theory. So that was a brief intro. Now, why is Dow theory important to you? First, Dow theory will help you as an investor to predict and understand the behavior and the overall direction of the market. Next, it will help you as an investor to spot hidden trends in the market and help you manage your open positions very efficiently. And three, analyzing the market using Dow theory will help you know where the bigger players of the market are investing so that you can capitalize on it. So overall, this topic will help you understand Dow theory in detail, and you will learn to identify stock trends and market trends and then relate them with volumes to increase your stock selection accuracy. It will help you understand where the markets are currently, which will ensure that you never enter the markets at a wrong time, especially when a bubble is created, and you invest at the right stage. So friends, stay tuned. Now, Dow theory can be understood by studying its 6 principles, and we'll see them one by one. So, the first one is the market moves in 3 trends. The Dow theory defines the movement of the market in the form of trends. The trend in a stock, or for that matter index, it represents the movement of the stock or the index in a particular direction over time. And friends, trends can be bullish, that is uptrending, or bearish, that is downtrending, and move in a zigzag fashion. So a trend is termed as an uptrend if it forms consecutive higher highs and higher lows. Consider the example of JSW Steel Limited between February 2016 and August 2016. JSW Steel was in an uptrend since every new high that it made was higher than the previous highs, and every new low it made was higher than the previous low. Similarly, a trend is termed as a downtrend if it forms consecutive lower highs and lower lows. Let's consider the example of Jet Airways between Jan 2018 and August 2018. Jet Airways was in a downtrend since every new high of the trend was lower than the previous high, and every new low of the trend was lower than the previous low. Now that we understand what trends are, using these trending analysis, the Dow theory divided the market into 3 types of movements or trends. That is primary trend, secondary trend, and minor trends. And to understand this, let's consider an example of Nifty between October 2004 and June 2007. It represents the three trends that we just talked about. And the first one is the primary trend. This is the main underlying trend. It could be bullish or bearish. It lasts from 6 months to several years. It remains active until a trend reversal is confirmed. Second one is the secondary trend. This occurs within the primary trend and is usually opposite to the primary trend. So here the red arrows show us that the secondary trend is actually bearish. It's a bearish correction to the bullish primary trend. It is treated as a correction to the primary trend of usually 10 to 35%. Its duration is smaller than the primary trend and may last from a few days to months. The third one is minor trend. This occurs within the secondary trend and again it is usually opposite to the secondary trend. Here the minor trend, which is shown as blue circles, if you observe, the trend is bullish to the bearish secondary trend. So this trend is treated as a correction to the secondary trend, usually 10 to 15%. Its duration is again smaller than the secondary trend and may last for as short as say 10 days to maybe 3 months. So the Dow theory states that the market will always show these three movements or trends at any given point in time. That's how the markets move. And if you understand this, you understand stock markets better than anybody else. Now let's understand something important about the primary trend, which will help you understand when exactly is a good time to enter into the stock markets. This is the second principle of Dow theory, so listen carefully. The primary trend has three phases, that is accumulation phase, public participation phase, and the third is peak or the bubble. Now let's try and understand these phases with the help of a Nifty chart between 2003 and 2009. Let's first talk about the accumulation phase. This phase started in mid 2003 to 2004. During this phase, well-informed investors go on buying in huge numbers. This is just the start of the bull rally and it is very difficult to spot on. The valuations in this phase are very, very attractive. The second phase is this public participation. This phase occurred between 2004 till mid 2007. It occurs after the accumulation phase where the overall market sentiments and the whole economy looks very good, improved. Everyone, including the retail investor, they start participating. And this is the longest phase where stocks move very fast. And this phase is generally backed by trend followers and technical analysts, and you would see noticeable spike in the volumes here. The third phase is peak bubble. This phase started in mid 2007 till January 2008. It is the last phase where the entire market scenario is extremely positive. It just looks positive. Every Tom, Dick and Harry starts talking about investing in stocks. Stocks are expensive, very expensive, but they appear to investors as if they're going to double in the next few days or months. In reality, this is the last phase of the primary trend, after which a trend reversal will happen and the markets will fall. The bull rally is over. Lot of retail investors get trapped at this stage, friends, and they lose a lot of money. You can see the markets started falling from Jan 2008. Friends, there are many people who entered the markets at peak in 2008 and they lost all their wealth. Even today, they have not been able to recover their losses. Had they understood Dow theory then, they would have been on the winning side today. So before entering the market at any point in time, an investor should correctly estimate the market phase using this Dow theory. So before we recommend stocks to our clients, we estimate the markets first and then make recommendations accordingly. Now you know the trick. Now, likewise, these three phases are applicable to individual stocks as well. Let's consider the example of Jet Airways between October 2008 and September 2011. In this example, Jet Airways was in accumulation phase from October 2008 till May 2009. Then the market shifted to the public participation phase with a huge increase in volume. The beginning of the bubble or the peak started in August 2010 and lasted till the end of 2010. This was the last phase of the primary uptrend, after which the stock fell. So now you know when you should be entering into a stock for maximum gains. Now our third principle of Dow theory: market discounts everything. This point in Dow theory means that stock prices reflect the ultimate truth. They represent all the necessary information pertaining to the past, the present, and the future. This principle means that the analysis of fundamentals such as economy, interest rates, your valuations, your quarter numbers, your oil numbers, your sentiments, they all are completely irrelevant as long as the chart is analyzed well. The stock prices and the markets, they have already accounted for everything under the sky. That is the assumption. Now the fourth principle, the principle of confirmation by indices. This principle states that a major reversal of the primary trend, it cannot happen unless all the major indices of the market, they show a similar reversal of trend. For example, the banking sector, it plays a major role in the Indian markets. The banking sector also has a very higher weightage in the construction of the Nifty index. So according to the principle of Dow theory, any major reversal of the primary trend in the Nifty index should be confirmed by a similar movement in the Bank Nifty index. Consider this chart of Nifty index and Bank Nifty index over 10 years between August 2008 to August 2018. The one in red is Nifty and the one in black is Bank Nifty. If you observe, all major reversals of the primary trend of Nifty are confirmed by the reversal in the primary trends of Bank Nifty. That is, when Nifty falls, Bank Nifty falls too, and when Bank Nifty rises, the Nifty also rises. Basically, the point is that the two indices, they must always go hand in hand and they must always be in the same direction to confirm a trend. So that's how you would always confirm a trend from multiple angles. Now the fifth principle, that is the principle of confirmation by volume. Now as per this principle, a trend with the support of higher volumes sustains for a longer period of time. This principle also indicates that the reversal in a trend would be successful only if it is supported by an increase in volume. Now you consider this chart of Sun Pharmaceutical Limited between May 2017 and September 2018. All major reversals in the primary trend, as seen by these blue circles, are supported by a sharp increase in the volume seen by those green arrows. This means that the trend change is successful and will last. And now, the last and the sixth principle of Dow theory. Trends remain active until a clear signal of reversal is formed. As per this principle of the Dow theory, the trend continues to persist until a clear and strong sign of reversal is observed. Let's see this Nifty chart between October 2015 and February 2016. Here Nifty has a primary trend of a downtrend with lower high, lower low formations till February 2016. But the primary trend changed and the formation of lower high, lower low stopped from March 2016 and confirmed a reversal in the primary trend. This point teaches us that the trend reversal can come anytime and we should have well-defined entry and exit points. Friends, we recommend the right stocks to our clients at the right time so they don't have to worry about the entry point. We also empower our clients with clear exit strategies that help them exit the stock when the trend changes. We provide our analysis on whether they should be buying or selling a particular stock. With all these features and knowledge, you approach the markets more technically and give yourself an amazing chance to make money from the stock markets. Otherwise, friends, just shooting in the dark. So friends, use this Dow theory effectively. It can be a game changer. We use this theory abundantly when we recommend stocks to our clients. It just increases our accuracy to a very large extent. Now let's talk business. One day I want to honestly say, I made it. Friends, don't keep showing your intelligence. Intelligence will take you nowhere. Show that madness, show that passion. Get up, go, and get it. And one day say, I made it. Friends, just to remind you again, there are those 36 life-changing training ebooks waiting to be downloaded absolutely free of cost from our website. The book titles and the download link, it can be found in the description below. For many such amazing videos, please subscribe to our channel and hit that bell icon. If this video has added value in your life, please like and share. If you have any questions, please let us know in the comment section and we'll surely reply. Thank you. Jai Hind.